Hey guys, good afternoon, everybody. Today is Monday, June 5th. It is 2:03 right now. Our scheduled mentoring sessions for 2 o'clock. So I'm running a few minutes late. Just gonna run this up real quick, finish editing the details, and we should be good to go. So if you guys have any questions, feel free to put them in the chat. Otherwise, I will send out this link shortly and we will get started with our analysis in a few moments here. A couple things here to update. Looks good. Looks good. So it looks like we are good to go. So let me get this link sent out to you guys here in the premium. All right. Get a few moments for people to make their way in. It started shortly. Looks like people are starting to join in. All right, perfect. I'll get a few more moments for people to make their way in, guys. Good afternoon, everybody. It's Monday, June 5th. Our scheduled mentoring sessions for 2 o'clock. Looks like people are still joining, so I'll give it a few more moments before we get started. But if you guys have any questions, feel free to put them in the chat, and we'll answer the questions in order as they come in. Hey, Hussein, how's it going? Hey, Dan. All right, looks good. I got everything all updated and good to go. Hey, Barty, how's it going? All right, cool. So our first question here is from Barty. Barty wants me to show him V1 variations. So we're going to start off with that. If there's any other questions that you guys have, feel free to pop into the chat. Otherwise, we don't really have an itinerary for today. It's kind of just going off whatever questions you guys got. So whatever you guys want examples for or explanations for, or any type of, if you want me to clarify on anything, just let me know. So, all right, first question from Barty, V1 variations, and then we have Hussein. He wants some examples of the high-level momentum scalp. So those are basically the two main topics we'll be covering today. If there's any other strategies that you guys want to see, just let me know, and we will cover them. All right, I think that's it right now. So let's just start off with the V1 variation. So I can't necessarily look at the overall bias for today, Barty, because we don't. I don't know what the bias was after the live session. But I'll just show you some examples as we continue along with, any possible entries here. So I'll just look for examples with the setup, but I'm not going to be able to confirm the bias. That's going to be one of the things that I can't confirm later in the session because it's obviously it's at a later time. We can kind of assume where the bias is, but I'll try to keep it as close as possible, because you can typically see what the trend's looking like here on the 1 minute, but it's hard to tell what the overall bias was because the fundamentals can be bearish or the sentiment can be bullish. This is really hard to tell. So I'll start off by looking at this right here, and I'm only going to use this because this looks like a good example. So we'll use this one here first for a V1 variation. I'm going to go and turn off the extra indicators that we don't necessarily need. And I'll put the criteria up here for a V1 variation. So for the V1 variation, this is a continuation or a reversal pattern, depending on which direction that you're trading in. So First, you want to confirm the overall bias. As I mentioned, we can't really confirm this later on in the session because this happened in the past. So this happened at about 8:30 a.m. About, let's see, 9, 10, 11, 12, 1, 2, about 6 hours ago. So this entry came up about 6 hours ago. You want to confirm the overall bias. I can just assume that the bias was bearish. And the reason for that is because you can see over here on the 1 minute that price is bearish, right? And the reason why we know that is because price is below the pivots, the trend meter is red, and the pivots are angling down. So you can see that it's been pretty much bearish 2 hours prior. So we can just assume that the technical bias was bearish. I can't say exactly what the fundamental bias was. It was probably bearish as well, because I remember we were looking for price to continue dropping during the live session. And then for retail sentiment, we're just going to assume that it was bearish. So this here is a setup for the V1 variation, and I'll show you why. We'll confirm step one. We're just going to assume that it was bearish. We can't really confirm for sure what it was like since we don't trade after 8. However, going down to the second step, you want to confirm the high-low using the high-low indicator. So looking back right here, you can see that there is a higher high right here. It doesn't matter if it's a higher high or a lower or a higher low or a lower high or a lower low, any of that stuff. It just needs to be some type of high or low. Right here's a higher high. I typically like the higher highs and lower lows better because those will help you identify where tops and bottoms are. So with that said, step 2, you want to confirm the high low. There's a higher high right here. After that, you can move on to step 3. Step 3, you want to confirm that the candle following the high low is a double wick or double body rejection. So right here's the higher high, and you can see the candle right next to it has a double body, right? Right here, you have 2 bodies on the same level. That's going to be step 3. Once you've confirmed that, you can move on to step 4, which is to confirm a pending momentum in the direction of the trade. So to do that, you just want to look back at the most recent momentum. Right here is a buy momentum. The next momentum is going to be a sell momentum, right? Because it can only go from buy to sell to buy. So with that said, since you're looking for a sell here, you're basically anticipating a top or a bottom, and then you're looking for momentum to push in that direction. So with that said, going back to step 1, confirm overall bias, we're going to assume that it's bearish here because it is bearish on the 1 minute. Number 2, you want to confirm the high low. There's a high low right here. It's a higher high, but it's still considered a high low. Step 3, you want to confirm that the candle following the high low is a double wick or double body. There's a double body rejection right there. And for step 4, you want to confirm that there's a pending momentum in the direction of the trade. So right here, we have a pending sell momentum. And with that said, you can enter on the open of the following candle. So once you get it right here, that's going to be V1 variation entry. You go for 100 pips. You got the setup right there. You let the trade run. And as you can see, price goes sideways for a bit, but eventually it blasts right through for a full TP. So that'd be a V1 variation right there for a sell. Yeah, no problem, Barney. I'll see if I can find one more example here, and then we'll move on. So that was one example right there. There's another one. I mean, there's a whole bunch here. There was like one right there. There was another one right here. There was another one right here. There's like a whole bunch here that came up. So yeah, there's like 3. So this is the one I just showed you. Again, right here, another one. You can see that it's a double body rejection, pending sell momentum. Same thing, short position right there. Same setup. Trade runs, full TP. There's another one right here. And you can see this strategy is very lucrative if you do it properly. If you know what you're doing and you can identify these quickly, double body, pending momentum for a sell. And these all happen right after each other. 1 second, guys. Sorry, my dog's barking. Anyways, there's another entry right here, Barney. Same thing, same setup, double body rejection, pending sell momentum. We're going to assume it's a sell bias. Go for 100 pips right there, let the trade run, full TP. So as you can see, there's 3 full TPs that would have hit right here if you're running the V1 variations. Super simple strategy. It's just, I feel like a lot of people skip steps. Main step is waiting for a pending momentum, right? I feel like a lot of people skip that. But again, right here, another one, full TP. And then one more over here, the other one that I showed you initially. Again, right there, double body, pending momentum. Same setup. Let the trade run and full TP there as well. So pretty solid right there. not a very difficult strategy. It's just really making sure that all the criteria is met. All right, so those are examples of V1 variations. If there's more that you want to see, Barty, let me know. But you can see that the strategy is very simple. It's really just looking for direction of bias, looking for that reversal pattern or continuation pattern, depending on how you're applying it, and then writing it to momentum, basically. All right, the next question is from Hussein. So let me see. Hussein wants me to take a look at some high-low momentum scalps. So I'll see if I can find any over here, and then we will go over that. All right, so let me see if there's one right here. So with this example, I'm just going to turn off pivots 3 and 4 because they're just not necessary. You don't really need to confirm any of this stuff. It's really just pivots 1 and 2. Let me see if I can find any here. All right, here's one example here. I don't think this is one I would take, so the candle looks pretty big. But I'll just show you again the criteria, because I know you're getting confused with this strategy here, Hussein, but it's a very simple strategy. So I think the thing that you keep getting mixed up with is the second requirement, right? Looking for a momentum signal that's breaking, closing past pivots 1 and 2. Technically, step 2 and 3 are the same. These are like one requirement. I just split it up so it'd be easier, but it seems like it's confusing you. So what you should do is just look for a momentum signal that breaks and closes past pivots 1 and 2. Like, think of this as one requirement. Because what seems to happen here is you keep skipping like one of these steps. You're either looking for price to break and close past it, and then you're looking for momentum, or you're looking for momentum and it's already broken and closed past it. So you should probably just focus on like keeping these into one criteria. I think that's where you're getting confused with, because it's a very simple strategy. I feel like you're just overcomplicating it, which is fine because it's still new to you. But let me show you an example here. So not this one right here specifically. Let me see if I can find a better one over here. The market was just choppy today, so you're not really going to find too many here, but I think there is one. See how big this candle was. Okay, so there's one right here actually. So okay, let's go over the criteria, Hussein. Make sure that you're going over these one by one, or like I mentioned, just bundle these two into one criteria. So first, you want to identify a higher high or a lower low, right? Looking at this right here, we have a higher high. Right? Second, you want to identify a valid momentum signal. So you have a valid momentum signal here. And what it seems that you've been doing is you keep skipping this step. You keep looking for price to break and close past it before the momentum. But it has to happen at the same time. That's why I'm saying step 2 and 3 are pretty much the same exact strategy. I mean, it's the same exact requirement. It's just you have to put them together because you're looking for a momentum signal to break and close. You're not looking for any random candle. You're looking for actual momentum. So with that said, step 1, identify a higher high, which is right here. Step 2, identify a valid momentum signal. There's a sell signal right here. Third, identify price break and close past pivots 1 and 2. You can see that this candle right here is breaking, closing past pivots 1 and 2. There's no candles prior that have broken past it, right? One thing that I see that you keep identifying incorrectly is that you look for momentum after it's already broken and closed. Or you, like today, you've mentioned a couple of criteria that aren't even part of the requirements. You're asking like if price has to touch the pivot or if the wick has to touch the pivot, because that's not even a criteria for this specific strategy. You're just looking for momentum to break and close past it. That's really what it is. So with this setup right here, there's a higher high, step 1. Step 2, this is a valid momentum signal. Step 3, price is breaking, closing past pivot on the momentum. And with that said, you enter this for a short position. You go for 100 pips, you let the trade run, kind of go sideways for a bit because market was pretty choppy today, but you can see eventually price comes down and it goes straight to full TP right there. It took a while, but it ended up hitting right there. Gotcha. Okay, yeah, Hussein said, okay, got it. Now, all the previous candles did not close below the candle, but the momentum candle was closing below the pivots. Exactly. So that's exactly what you're looking for, Hussein. You want to tie momentum with breaking, closing past the pivots. I think what you were confusing before is that you were like doing them separately, but they have to happen on that same exact candle. Let me find one more criteria here for you. All right, there's one more right here, right next to it. Same thing again right here, right? Same. So right here we have a lower low. Let me put the criteria up here again. So identify a higher high or a lower low. Right here, there's a lower low. Identify a valid momentum signal. There's a valid momentum signal right here for a buy. Third, you want to confirm price is breaking and closing past pivots 1 and 2. This candle right here is breaking, closing past the pivots, right? That's what you're looking for. You're looking for momentum to break and close past the pivots. So once you have that right there, there's your entry. Again, you set this up for a buy. You go for 100 pips. There's your setup. You let the trade run, full TP. So as you can see, it's very simple. It's just, and you're not the only person to confuse this. Like, this is a common misconception that a lot of people get confused with, but it's not really that difficult. Here's one more other criteria again right here. Higher high, sell signal, breaking, closing past pivots 1 and 2 right there. You go in for a short position right here. So this one right here, I personally would skip because this is what we talked about before. But since you're still practicing, Hussein, you can just take these trades like with a demo account or something, or you can just practice. Like, I wouldn't take this because typically when I see a candle like this, I'm going to expect it to retrace, right? So I don't want to enter right away. But you can see right here, it goes straight to TP. So it's not a criteria that you have to add into it. But for me personally, I don't like taking trades when the candle are this big because this will likely happen. Your trade will play out. But for me, I'm a conservative trader. I don't like losing trades, so I'm not going to take something that's too risky. So let me see if there's another one here that I can show you. But you can see, like, if you go and backtest this, it's very simple to go back and backtest because the entries come up so often. It's not like a strategy that comes up like very rarely. It comes up super often. So like when you're looking through these, you're just looking for a criteria to be met. Again, right here. Same thing again, right? So you have a higher high right there. You have a sell signal. It's breaking, closing past. It's breaking and closing past pivots 1 and 2. You have the setup right here, short position. You go for 100 pips, full TP. So as you can see, like, we just went over like 3 back-to-back wins or 4 back-to-back wins for this strategy. It's not very difficult. It's really just, following the criteria as it is supposed to be met. So super simple. If there's anything else that you want to see here, Hussein, just let me know, because I know you have an issue with the strategy. I want to make sure that you actually understand it. The last thing I want for you to do is to keep making mistakes with identifying entries. So if there's anything else that you're confused with, or if you want to see another example, or if there's an entry that you saw yourself and you want to see if that's like a proper entry, just let me know. Like, give me a timestamp and then I'll pull it up. Because, it's better to get this stuff out of the way now where you can understand it versus having to make mistakes and then relearning it later. So Hussein says, should I add red flags to add accuracy to my real account? You should eventually, but right now you don't even have the basics, right? So once you actually get the strategy down, then you can start adding the red flags and you can start adding the bigger candles, right? Because you don't want to add too many things at once and you don't even have the basics down, right? Once you have the basics down and you don't have any more confusion with identifying entries, then add the red flags and then add, anything else after that. But until you can actually get the strategy down, like the very bare basics, you shouldn't add anything to it because you're just going to confuse yourself even more. So I think for now, just stick to the original strategy. Even if it's a big candle or even if there's a red flag, just practice identifying proper entries. Once you're like set where you don't identify them incorrectly anymore, then you can add red flags and then you can add anything else after. Yeah, you should practice it because every time we've covered it, it's like you always confirm that like you understood it, but then you ask the same question like the next day and it's like completely wrong. So just, there's no rush, Hussein. Like, I want you to keep this in mind. Like, there's no rush. I feel like a lot of people, they see these strategies and it's so simple and they want to hop into it so quickly, but then they just make a bunch of mistakes along the way. So there's no need to rush, Hussein. Like, I know it might seem like you get it, but if you're asking like the same question over and over again and you're not getting it, then, you should practice on just getting the basics down first. Because I just want to make sure you're getting it. I don't want you to rush through it and then you mix up the requirements and then later on you add the red flags and then you add, the big candles and then you start like kind of confusing it. Because I think there was like one criteria that you were asking about it touching the wicks, and there's no criteria here about touching any wicks. So it sounded like you were confusing the strategy with another one. So, Yeah, I mean, just start off with this right now, Hussein, and then baby steps. Like get the basics down. Once you're like good and you know how exactly how to identify the entries, then you can add on extra. But for now, just stick with this. All right, so we're done with this question right here. Let me scroll up real quick. There's another question here from Martha. So Martha is asking, hi, Sean, can you clarify what CJ mentioned today during the live about having momentum signal in one of the candles? So do you remember what the question was, Martha? Because I don't really remember it. Because I don't want to give you an answer and then it's not like it's not going to be it's not going to respond to your question, Martha. So do you remember what the question is? Because I think I know what he asked, but if you don't even know, if you don't know what he asked, then I don't want you to be confused. So can you clarify the question? Okay, perfect. I just want to make sure that you weren't going to get confused. I knew what the question was, but I just didn't want you to get confused. Okay, so let's go back to the example. Example came up earlier today at like, I think 7 something. Was getting close to like market close. Okay, so it was this one right here. Okay, so his question was asking whether it was okay to have momentum. Well, what he said, so CJ mentioned that he said that he thought that that we couldn't have momentum on the V1 variation. So the thing with that is that you can have momentum on the prior candle, but not on the actual entry candle. So right here is a V1 variation for a buy. We could just assume that the bias was bullish. I can't say for sure, with the V1s because market was kind of all over the place this morning, but we were looking for buys this morning. So that's why I can assume that it was bullish. So first, confirm overall bias. We can't confirm it, but we're going to assume that it was bullish because you can see from my trades here, I took a buy this morning. So obviously I'm only looking for buys because it was bullish, right? So we're going to assume that the overall bias was bullish. Second, you want to confirm the high-low. There's a high-low right here, lower-low. Third, you want to confirm the following candle, the double wick or double body. And fourth, you want to confirm that there's a pending momentum in the direction of the trade. Since we're looking for buys here, pending momentum would be a buy because there's a sell signal right here. The question that CJ was asking was whether it was okay to have momentum here, right? It's okay to have momentum on this candle, but it's not okay to have momentum on this candle. So the one before it's fine, but you can't have it on the second candle. So with this right here, this would be a setup and you would take the trade there for a buy. And this is the one that we were discussing. So you can see right there, full TP. So same with this one over here. There's another entry right here. This isn't an actual V1 because the bias is bullish. So you wouldn't take a sell here. But if you were to take the sell, then this would be okay too. Because there's momentum here, but entry happens down here. And that's where it would be. Full TP right there too. So full TP right there. And then full TP right there. Just depends on what the bias was, but it was bullish, so I wouldn't have taken the sell. I just went for the buy. Gotcha, no problem, Martha. All right, let me scroll up real quick. All right, see, next question is, or that's not a question, it's just from Barty. Barty said, your liquidity strategy made me money every time. Can't thank you enough, brother. I just messed up today, got greedy, but won't trade after the session. Yeah, so Barty over here, he posted his profits. He had to recover though. So he had wins here on open and then he traded again, like after the live session and he lost a couple of trades here for a sell, but then he made it right back. Luckily he made it back into profit, which is a good thing. Key thing is just to close out the day in profit. But what Barty was just mentioning is that liquidity pushes every day have been giving him profits every single day. So, and that's one of the main strategies that I'm applying. That's why I'm applying that one specifically, liquidity pushes or basically liquidity push on open and the high-low momentum scalps. That's pretty much all that I'm applying for the most part. Let's see, iPhone is asking, can you go over what liquidity are you marking up? Is everything, and what are you looking for as which line you're looking to enter and why? So I want to read your question again, iPhone. So iPhone's asking, can you go over what liquidity you're marking up? So I mark up the same liquidity every day. It's like the same process. If you want to go and review that, guys, you guys can look back at any previous live session, but I'll show you guys what I'm marking up. It's nothing different. I do the same thing every morning. And there's no specifics to it. It's kind of just marking what's there because you want to know where liquidity is sitting, throughout the day. So the way that I mark up liquidity is I go over here to 6:30. So this is before market open, right? Or maybe we should go to a different day because this day just wasn't really, we didn't have a liquidity push this day. So let me go to like a day where we actually took a liquidity push. Let's go to Friday. I can't remember if we took liquidity on this day, but, or let me check. I think we did take liquidity on that day, no? June 2nd. Yeah. So let's just go over here to Friday because Friday was an actual liquidity push that we took. This was NFP, so the market was moving kind of crazy, but it still works regardless. So basically, I'll just clean up the chart a little bit so that you guys can see better. But it's the same process every day. Nothing changes. It's like literally the same thing. So if you guys are confused about like what I'm marking up, just go back and rewatch any live session for like the past, 2-3 months, and you'll see exactly how we mark this stuff up. But it's the same thing. So here's how I do it. I start off on the daily time frame. And I mark up all of the liquidity zones, which are untested high lows. So basically any high lows that have not been tested or touched, that's going to be considered liquidity in my perspective, because that's typically where people place their stop losses, right? So price is right here. That's going to be the first level. These levels have already been tested by this candle, so they're no longer going to be considered liquidity to me. So I just go in and mark up all of the untested high lows. You guys can do this by hand, but it's not really recommended because trying to do this by hand is going to be like literally impossible to do as efficiently as I do. So if you guys don't have my indicator, you can do it by hand, but this is what your chart will look like. So see, identifying those high lows are not going to be easy. So let me turn this back on. There goes the high lows right there, aka liquidity, untested high lows. That's on the daily. I'll go down to the 8-hour next. So from the 8-hour over here, doing the same thing, marking up all of the untested high lows. After the 8-hour, go down to the 4-hour. Nothing there, go down to the 2-hour. Go down to the 1-hour. I basically just go down half time frame. So I go from the daily 8-hour, 4-hour, 2-hour, 1-hour, 30-minute, 15-minute, 10-minute. So here's a 1-hour time frame right there. It's all on the 1-hour, 30-minute right here. I mean, a lot of these are going to be irrelevant anyways because price is so far from it, but I just do it for visualization purposes, like just so that you guys can see where liquidity is sitting. But these are probably not going to get hit, right? Price is so far away from this area, they're not going to get hit. I just mark them up so you guys can see where they're sitting. And lastly, the 10-minute right here. So we'll go down to the 1 minute. That's all liquidity right there. So, you look at it right here, where price is currently at, there's only going to be 2 different levels that are probably going to get hit, right? It's probably going to be this level down here, which is 1,400 pips away, or this level up here. Let's see what this is at. I'm a little confused because this is from Friday, right? I don't see the area of liquidity that we marked up. We go back to the 10. Okay. So I think we marked up this level right here as liquid because there was a level right there. but for some reason I don't see it on my chart. Oh, okay, sorry, it was right there. It was on the 30-minute. I just didn't see it. Okay, so we did have a level right there, I think. That's what it looks like, yeah. All right, so we have the levels right there. You can see that this level right here is like, it's pretty far, but this level is a lot closer to the upper level. And the reason why I was convinced to take the buy here is because NFP was good, like the news was good. So that's why I took the trade there. But anyways, I marked up all the high lows that are untested from the daily down to the 8-hour, down to the 4-hour, down to the 2-hour, down to the 1-hour. I mean, odds of these getting hit are probably unlikely, like I mentioned, but the ones that are probably going to hit are the 10-minute and the 15-minute. So we have those marked up right there. You can see the market right here. This is when market opens at 6:30. We have a price to come up. I think it hit right there. And then what happened was we took the trade there for a long. And price blasted right through the TP. So that's how we market liquidity, and that's how we take liquidity. That's the same trade we took right here on Friday. You can see the timestamp from this trade. And these were my profits from that trade there. I'd take it for partial because it was NFP, only went for 100 pips. But typically I'd go for the full 300 if it wasn't NFP. Let's see, iPhone's asking, so the 10-minute lower low. What do you mean by that, iPhone? So liquidity could be anywhere. It's just going to be, it doesn't have to be the lower low. It could be lower, I mean, it could be a high low, lower low, anything really. It's just whatever is nearest to, it would be that or the upper. You could go under, you're looking for both directions, iPhone. You're not only looking for a sell, you're not only looking for a buy, you're just looking for liquidity to get hit in either direction. So we took the buy here, we didn't take the sell because liquidity down here never got hit. So we took the buy here because the bias was bullish, and then also NFP news came out that day and it was also bullish. So we just had a lot of confluences indicating that price was going to be bullish. So when you're taking liquidity, you're kind of using multiple confluences. You have the levels marked up. That's what we mark up for liquidity. But then for your entry, you're kind of analyzing it to determine, which direction you want to trade in. Like, for example, if price came down, so you know how we have the buy right here? So for example, we had the buy right here. But if price was to come down super heavy, say market open and this thing just dumped down straight to this level, I wouldn't have taken the sell at that point because price was way up here. And for price to get down to this area, that's about 1,400 pips, right? So if price was to get down to here, it'd be overextended. And then price would probably fake out, hit that level, and then shoot right back up, right? So that's why I wouldn't take the sell there. But like, say, for example, we had a lower, like, say the liquidity was right here, it was closer. And say we had news that morning and news was negative, right? If that was the case and price came down to here, then I would have taken that sell. So we don't really predetermine our direction on open. We just kind of play by ear. We see like where price is going. Like if price is really close to this area and it hits this area right here, then yeah, we'll take the sell. But price was close to a buy here, right? So that's why I took the buy instead. So it just depends on like what the market's providing for us, because the market gives hints. Like, you have to look at the news from pre-market. If it's a big news event, typically like 1 to 2 things will happen. Price will either go opposite of news or it's going to continue. You can see right here, price pushed up heavily from 530. This was NFP right here. Price pushed up, retraced down. And I was already expecting price to continue pushing up higher. And that's why we took the buy there. So that's how it lined up. Let me see if there's anything else here that I'm missing. So yeah, if there's anything else you want me to cover regarding that iPhone, just let me know. But I'm pretty sure it's like pretty self-explanatory. If you want to see me mark up liquidity again on a different day, I can do that. but it's the same process. There's nothing different. It goes from the daily 8 hour, 4 hour, 2 hour, 1 hour, 30 minute, 15 and 10. Pretty much same thing every day. I think you probably would do better reviewing the live sessions because it's like a lot. It makes more sense when you watch me doing it live versus me rewinding the chart and showing you, because I go over the news and I go over like a lot of other stuff versus right here where I just mark up the liquidity, but I can't really cover the news or like how the market was looking pre-market. So I think better way to identify if you want to see examples of me marking up liquidity is just looking at previous days, because I do the same thing every morning. All right, let's see. Let's see, Allison said, you may have mentioned it and I missed it, but when trading liquidity, how do you ensure it's a good trade rather than just a small stop hunt and reversing? I noticed that on my back testing today. If you mentioned it, don't worry, I'll go back. No problem, Allison. So that's kind of what I just discussed right now. I don't know if you like just got onto the live session, but there's a couple different factors that I look at. So I look at news that happens pre-market. So on this day over here was NFP. It was NFP day. You can see the big spike to the upside. So NFP happened right here and price was already bullish, right? So that's one confluence. It's like, all right, price is bullish pre-market based off NFP. And we can go back to the news from that day. And you can see that the NFP here was positive, right? So we had a couple confluences there already. We had confluence with news that was bullish. We had confluence with overall bias. The trend was bullish. Fundamentals are bullish. Retail sentiment was bullish. Everything was bullish. So I have these other confluences that kind of like indicate that, okay, this is probably going to keep pushing that direction. So, it's a full spectrum of things that I look at. It's more so looking at news, looking at overall bias. Is that if everything's bullish and news pre-market was bullish and you're expecting price to continue in that direction, then that's when I would ensure that it's a good trade for liquidity. However, if this news here was negative, so say this news here was negative, and say the trend was bearish, right? The trend obviously is bullish right here. You can see it's bullish. It's like very bullish. Trend meter is green. I mean, there's so many things pointing towards a buy here. Pivots here are very bullish. So this right here, obviously, I'd be looking for a buy. If this was bearish and we still got a buy, then in that case, I would consider that just a small stop line. In that situation, I would go for 100 pips versus the full 300. The only difference was that for me, it was NFP. So that's why I went for 100 pips versus the full 300. If it was a regular day and we had all these confluences, I would have gone for the full 300. But since it was NFP, I didn't want to get caught in, fake outs and whipsaws. So for me personally, that's why I only went for 100 pips versus the 300, which I normally would go for. Yep, no problem, Allison. Let me see. I'm going to scroll up real quick. I'm just going to see if there's any questions here regarding liquidity. And if not, we're going to go over the next question. I think there was one more question here from Hussein. So Hussein said, hi, Sean, when you mark up liquidity, can I simply enter the trade because you are waiting most of the time for a retest and then enter? Should I just enter trades with less risk every time you mark liquidity? I mean, that's a personal decision, Hussein. Like if I'm telling you that it's risky and I'm going to wait for it, there's a reason why I'm telling you to wait for it, right? If you still want to take the trade, that's really up to you, because I'm literally telling you what to do. If I'm telling you, hey, I'm going to wait for this to retest and I'll make entry, then you should probably wait for it to retest and make entry. If I knew it was going to be for sure, then I would have entered it right away. I wouldn't be waiting for it. So it's really up to you, right? If you want to enter the trade right away, you can enter right away. But if I'm like literally telling you, hey, Hussein, this trade over here is risky, I'm probably gonna wait for it to hit, then I'll wait for it to pull back and I'll go for late entry. If I'm doing that, I'm doing that for a reason. It's not because I'm just randomly saying, okay, I should wait for it. I'm saying that because I do think the trade is risky. So it's up to your preference if you want to enter right away. If I'm not entering right away, I probably have a good reason why I'm not entering right away, right? Because if I was fully confident about the position, then I would enter right away. There would be no reason for me to hesitate. So it goes back to it's up to you whether you want to take it or not. But if I'm telling you that something is like a maybe, then probably just wait for it. Because like for me, like I mentioned, I don't like losing trades. So if I'm not confident and I'm not like 100% sure it's going to hit TP, then I'll give you guys my reasons, and I'll also tell you what I'm going to do personally. Sometimes I wait for the retest. Sometimes I go for only 100 pips. Sometimes I don't even take the trade. So it's just up to preference. You know, if you feel like the need to take the trade, then take the trade and take lower risk. But there's no point in taking it if you're just gonna take lower risk, right? You might as well go on for the full trade if you feel comfortable about it. So it's just up to preference. But you know, usually my analysis plays out. So if I analyze something and I say specifics, then I would recommend just following what I'm doing. Unless like you're comfortable, then you can do however you feel comfortable doing. All right, so other than that, let me see if there's anything else here. All right, so those are all the questions regarding liquidity. Let me scroll up. I think there's one question here from Art. So Art said, scroll down. So Art said, is there one pivot that we will have to remove once we download it to TradingView? You don't have to remove anything, Art. If you want to leave them up, I usually leave them up. I only took off the pivots here so that Hussein could see things easier. But I leave all the pivots on my chart at all times. So I don't take off the pivots. It's just the strategy only requires pivots 1 and 2. So if you're confused with all the pivots, so if you look over here at requirement 3, it just requires pivots 1 and 2. So you don't need all the pivots, but if you're okay with having all the pivots up, then I would just leave them up because it helps you identify the trend. So for me personally, I keep them all up because it doesn't really confuse me at all. I know which one's pivots 1 and 2. You can even change the colors if you like. So if you want to make sure that you know what pivots 1 and 2 are, just change the colors to something that you know. So like for me, I put them to blue and green because I know for sure price crosses those blue and green, that's going to be pivots 1 and 2. I mean, it's just up to preference, right? You can leave them up. I leave them all up, but if you want to take them off, then, you know, just take them off. Yeah, no problem, Ark. All right, Ark's next question over here is also, what are all the indicators if we move from so if you're applying this specific strategy right here, Arc, the high-low momentum scalp, you need the high-low indicator, you need the momentum indicator, and you need the pivots indicator. Those are the only indicators that you really need. For me, I usually keep them all on. I don't necessarily take anything off because I like having more confluences, right? But if you want to just have the ones that are required for this specific strategy, it's going to be the high-low, the momentum, and the pivots. Basically everything that's here right now. But if you look on the live sessions, I usually have the trend meter up too, even though we don't really use it. I use it as confluence. So if I see prices bearish, then it's better for me to take sells for high-low momentum scalps. But you can take them either way. Like for example, over here, right? Like this was a high-low momentum scalp, but you know the trend was kind of bearish. So it just kind of depends on like what you're looking for. But you technically only need these 3 indicators: high-low indicator, momentum indicator, and pivots. But yeah, it's just up to preference. So like if it confuses you or if it's too messy, then just take off the stuff that's unnecessary. Take off the trend meter, and then you can also take off pivots 3 and 4. And you can see here it's a lot easier to see. But for me, it doesn't really make a difference. I can see without it, with it or without it. All right, let's see. Next question from Ark is, okay, last question. I'm trading on Ninja. How do I calibrate a contract versus lot size on MT4? I'm trading on Ninja because the Apex prop firm is cheaper than FTMO. So I have no idea, Ark. I've never used Ninja before, and I've never used Apex, so I can't tell you exactly how to convert it. You have to ask them directly. So you probably want to ask the broker or Apex, whichever one you're using, and just ask them directly, like, hey, what's the conversion? Because I can't tell you. I've never traded with them before, so I don't know. I don't even know what broker they're using, so I have no idea what the difference would be. I'm assuming it'd be one contract would be equal to a standard lot, but then again, I can't say for sure. So you have to ask them directly. So yeah, I wish I could help you with that, but I've never used it before. Let's see. ARC said it's 100 pips, 100 per pip, or 100 per pip. So for me, I use a 200 lot. That's equivalent to 2 standard contracts if you're using a futures broker. I'm not sure what Apex is because I've never used them. I've seen other people use them, but I'm not sure. So Kevin said that he uses Apex Trader. So for Apex, Kevin, is the conversion one standard lot to one contract, or is it different? Kevin's like one of the people here who's used it. So we'll see what Kevin has to say. All right, I'm not sure for sure, but we'll see what. Gotcha. Okay, so Kevin said one contract is $5 per pip if you trade with the Dow. Trade the Dow with them. Okay, so it seems like one contract is going to be equivalent to 0.50 lot or 50 lots for FTMO. Gotcha, it's different. Yeah, Kevin said it's different, Arc. So I can't tell you for sure. You probably have to go and talk to either if you want to reach out to Kevin or you want to reach out to Apex directly. But Kevin said it's different, so I can't say for sure. Let's see. Art is asking, how long does it take for access? So you got to email your username, Mark. You haven't emailed them over yet, or it looks like you might have. Let me see. So it looks like you emailed them, but we're on the live session, so it'll happen quickly. It's just I don't have your. Here, I'll send it over to the support team, but they're probably not going to be able to get to it until after this live session because they're on here right now. They're watching the chat. So I'm going to send this over to the support team, guys. If you guys can just give Art access, but I'm pretty sure they're probably not going to be able to do it till after. So we'll make sure you get that shortly, Art. But yeah, if there's anything that you want me to show you, Art, just let me know. You know, if there's any specific strategy, if there's anything that you want to focus on, just let me know what you like doing, and we can show you some examples. I know it's been a while since you've been around, but it's good to see you back. You guys have probably seen, if you guys have been around for a while, you guys probably remember Art. He was he's been part of the group for like a long time now. He's like on and off, but he's here. He's back at it. So it's good to have a lot of old members back here in the group. Perfect. Yeah, this strategy is easy, Arc. So I think you'll really like this strategy. This one and the liquidity. Like we have this right here, and then you follow liquidity as well. And it's like, you know, it's a one and done. You just take 1 or 2 trades a day and you're pretty much done. That's basically what I'm doing. Looking for quality entries and taking, you know, just a couple of wins here and there. Yeah, exactly. Kenneth said liquidity is GOAT. That's for sure like one of my favorites because you get into that entry so early, and if you know how to do it properly, you can just get in and out and then be done for the day. I think majority of my trades for the past 2 months have just been liquidity because these high level momentum scalps haven't really been coming up as often, or if they do come up, there's usually issues with them, or I just miss them in general. Arx said, how do I contact the guy that knows Ninja? I think Kevin's still on Telegram. Are you still on Telegram, Kevin? If you don't mind Arc messaging you. Let's see. Yeah, let's see. Kevin said they have a 1-step challenge, no minimum days, etc. They have pretty friendly trading rules. I guess we'll see if they're good when it's time for a payout. Yeah, exactly, Kevin. So if you figure out if they pay out, well, it's going to be kind of tough because I can't put like copier on it, but I guess I can use it. I can use it for like extra trades or like maybe even like longer trades. Let me see. Right, Art. I sent you a message on Telegram, Art. If you want to reach out to Kevin. But you're probably better off just messaging Ninja Apex directly. Yeah, Kenneth said getting into the trade is easy, just marking it up. has the most learning curve. We have Sean to confirm the liquidity zones. Yeah, exactly. I think marking up the liquidity is probably the hardest part for a lot of people, but I do it for you guys anyways in the morning, so it's not really that difficult. I'm gonna try to get on the live sessions a little earlier. I know lately we've been getting on a little later because I've been getting sidetracked pre-market. But I'll try to get on earlier so that we can mark up specific liquidity zones that are marked up on different time frames. Because obviously the higher time frames, the better. But lately I've been getting on these live sessions a little last minute. Like today, I had a bunch of questions in my inbox pre-market, so I was like answering a bunch of questions, and I just lost track of time. I'm gonna try to get on at least 10 to 15 minutes early, so we can mark up liquidity and then have like the actual times marked up. So I think that's going to make it's going to make a big difference for you guys when identifying, which one's going to be a higher quality liquidity zone. Let's see. Yeah, Ark said, is liquidity better than the high-low? I mean, they're both good, Ark. It's just the liquidity happens quicker. It's kind of similar to the breakout. If you remember before, we used to take a breakout entry, like during COVID and post-COVID, when volatility was very high. The liquidity is a favorite for everybody because you can get in and out of the trade very quickly. So the trade will come up like usually within the first couple of minutes of market open. And then from there, you're pretty much solid. Like it's just one trade. There's other liquidity pushes that happen, but the one on open happens super quickly. So you can get in, out, and then be done for the day if you wanted to. But I'm typically still in the live though. So even if we have that liquidity push, I'm still looking for high-low momentums in between. Let me scroll up real quick. All right, so we're done with that question there. See, question over here is from Brian. So Brian's asking, hi, Sean, can we go through some examples of the SR rejection for today's market? Yeah, sure. We will take a look at that. So let me just clean this up a little bit. I'm just going to use this chart over here because this chart doesn't have much of a mess on it. So let's see if we can find an entry over here for an SR rejection scalp. So let's go back to like 8 o'clock when the market was, or I'll show you some that came up here if I can see any. So let me see if I can find something over here. Market kind of died down over here during let's go back to this one here. Side entries here. See, this is like a 1025. So this is like past the live session time, but there's still an entry here. So let me go back to this candle right here. Okay, so let me put up the criteria for the SR rejection scalp. Again, it's going to be kind of difficult for us to confirm the overall bias because this is like later in the session. I wasn't trading at this time, but I'll just show you what we're looking for. Okay, so first step over here is first you want to confirm the direction of the trend using the trend meter. So you can see down below that the trend meter down below is red. So this is going to confirm that we have a bearish trend, right? So we're going to go and skip to the bottom area over here and look for entry here. So first step, confirm trading in the direction of trend using the K2 trend meter and pivots. So basically, you want to confirm that the trend meter down below is red, and you want to confirm that price is below the pivots. Pivots are angling down, and you can see here that price is obviously in a downtrend. So with that said, we're going to go to step 1, that's filled. We're going to go to step 2, identify a top wick rejection off the SRV2 zone with a moderate red candle. So let me just take a lot of this stuff off so that you can see better. So here's a clean chart. And what you're looking for is you're looking for a top wick rejection off the SRV2 zone. So you're going to turn on the SRV2 right here. You can see there's a bunch of zones here, right? In order for us to make it a little easier to look at, I'm just going to go and draw a rectangle over the zone. See how there's a zone right here, this red zone? I'm going to go and just draw a rectangle so that we can clean it up. Draw my own zone over that zone right there. And once we have that zone marked up, it's going to turn this off. So once I turn that off right there, first, we already confirmed that we're trading the direction of the trend. Everything here is bearish, trend meter is red. Price is below the pivots. Pivots are angling down. Once you confirm that, step 2, identify a top wick rejection off the SRV2 zone with a moderate red candle. So zooming in over here, you can see that there is a top wick rejection right here. And you can see that this is a moderate red candle. It can be moderate strong. The reason why you can see that is because the bottom wick isn't very big and the body is pretty big compared to the bottom wick, right? So this shows that it's a somewhat decent red candle. It's not a weak candle. It's not a very strong candle, but it's a moderate candle. So with that said, we have requirement number 2 met right there. Identify top wick rejection with a moderate red candle, which is right there. Third, you want to confirm that you're trading the direction of momentum. So you want to turn on the momentum indicator. You can see that we have a sell momentum right over here. So everything is pretty much met at this point. Step 1, we're in a downward trend. Step 2, we have a wick rejection off the structure right there. Step 3, confirm you're trading the direction of momentum. We have a sell momentum right there. Next, you enter this trade with a TP stop loss of 1030. You have that setup right there. You let the trade run, go sideways for a bit, eventually comes down and blasts right through to your TP. So there goes an example right there, Brian, of a SR rejection. Let me see if I can find another one here. Or if there's any questions regarding that, Brian, let me know. Otherwise, I'll try and find you another one. So that one was pretty straightforward. Let me see if we can find another one over here. All right, so. All right, there's another one right here. It's like right on the momentum candle. So again, right here, same thing. I'm going to do the same thing, right? So again, first step, confirm trading the direction of trend. You can see right here that price is below the pivots are angling down and the trend meter down below is red. So with that said, you can see that we are in a downwards trend, which is bearish. Again, you're going to look for the top wick projection off the SR zone. I'm going to turn all the extra stuff off here so that you can see it better. You can see that there's a zone right here, right? This green box. I'm going to go and create my rectangle right there. Turn that off. And here we go. So step 1, confirm that you're trading the direction of the trend. It's a bearish trend right here. Second, you want to identify a top wick projection off the SR zone. This candle again right here, it's projecting off the zone. Third, you want to confirm that you're trading the direction of momentum. Turn on the momentum indicator. You can see that this was a momentum candle. With that said, you enter a short position again right there. You go for again 100 pips. Let the trade run. And it blasts right through CP right there. So another example right there. Let me see if I can find one more. And then we'll move on to the next question. All right, price is bullish here. Let's see if we can find another one over here. Brian is asking, do you have to meet all criteria to make the trade? Yes, you have to meet all criteria to make any trade. So it doesn't matter if it's this strategy, it doesn't matter if it's the pivot scalp, doesn't matter if it's a high-low momentum scalp. The requirements are there for a reason. You're not supposed to skip any steps. Every criteria has to be met. If the criteria is not met, then there's no entry. That's the whole point of the strategy, right? So you got to make sure that all the criteria is met. There's only like 2 or 3 criteria, so it's not much to be met. It's really just, a lot of this stuff is already automatic. If you have a downwards trend, you're probably going to have momentum there already. You're just looking for a top wick projection. So realistically, it's like 2 criteria. It's nothing too crazy. But yeah, every criteria has to be met in order for you to take a trade. If there's no criteria, there's no entry. You can't move on to step 4, right? So if steps 1, 2, and 3 are not met, you can't enter on the candle, right? Because you can't even get to this step. If you have 1 and 2, but not 3, you can't move on to step 4. If you have 1 and 3, but not 2, you can't move on to step 4. So yes, you need to have all the criteria met in order for you to take the entry. All right, so that's it for that. If you want another example, Brian, just let me know. Otherwise, I mean, it's pretty self-explanatory. Let me show you one more example for a buy. I'll just show you one in the other direction so you can see here. Again, it's not very difficult. It's just kind of tedious looking for these types of entries because you have to be staring at the chart pretty consistently or you're going to miss the entry. So here's another one right here. And this is now for a buy. So SR rejection scalp. So same thing, you're looking for the direction of market. So you want to confirm trading the direction of the trend. Down here, you can see the trend meter down below is green. You can see prices above the pivots and the pivots are angling up. So with that said, you have a bullish trend. Second, you want to identify a bottom wick rejection off the SR. So instead of a top wick rejection, you're looking for a bottom wick rejection now. So with that said, I'm going to do the same thing, turn everything off so it's easier for you to see. You can see that there's a zone right here. To clean it up, I'm just going to draw my own zone over it. And I'm going to turn that off. Right. So right here, confirm trading the direction of momentum. It's bullish. Confirm the bottom wick rejection off the SR zone right there. Third, you want to confirm that you're trading the direction of momentum. Turn on the momentum indicator. It's buy momentum right there. Everything lines up. Insert. Sorry, guys, 1 second. All right, I'm back. So again, right here, guys, looking at the criteria, first confirm that you're trading the direction of the trend. Trend is bullish here. Price is above the pivots. Trend meter is green. Pivots are angling up. Bullish trend. Sorry, guys, 1 second. All right, guys, let's do this again. Sorry, my dogs keep barking. Okay, so step one, confirm that you're trading in the direction of the trend. Right here, price is bullish because price is above the pivots, trend meter is green, pivots are angling up, obviously a bullish trend. Second, you want to identify a bottom wick rejection off the SR zone. This candle right here is rejecting off the SR zone right there, and it is a moderate green candle. It's actually a strong green candle, so it's even better. So no wick on top, bottom wick rejection, full green body right here. Lastly, you're going to enter this for a long position right there. You're going to go for 100 pips. Let the trade run. Full TP right there. So there goes the example right there. Brian for the buy. So looks good right there. There goes the criteria. Everything's met. And that's another example of an SR rejection scalp. This strategy is meant for a ranging market. You can see right here that price was ranging for a bit, and then it broke out to the upside. So as we enter summer, this is probably going to be one of the main strategies that we'll be applying. We may add this to our list of official strategies. We might even swap this out with the high-level momentum scalp. But right now, it's still like on the sidelines because the market isn't necessarily super slow yet. It's going to get slower as time progresses, but we'll see where this ends up going. But this is one of our main strategies back last summer. So every time we get to summer, this is one of the main strategies to apply. I created this to figure out a strategy that works during a sideways market. This strategy works perfect during sideways market. It even works during directional markets, but it was meant for a sideways market. So we will see, when this will be more applicable. It's applicable today. You guys saw the entries today. There's like 4 or 5 entries that came up. So you can apply it even today if you wanted to, but it's just hard for me to focus on 3 different strategies at once, especially during live sessions because you get a bunch of questions. And I don't want people getting confused applying 3 different strategies at once. So, I can apply it because it's easy. I don't even have to look at the criteria. I just need to look at the charts and I can see, like I can just turn this on and I can easily see rejections, right? It's not that difficult. You're like looking for direction of price. Price is coming down right here. And it's not hard to see these wick rejections, right? Like right there. It's not too difficult. Like I can just eyeball it and I can find entries like right there. Because I created all these strategies. So these strategies are they're like second nature to me. And they're all kind of similar. They're very similar to like the original strategies that we apply anyways. So it's not like we're doing anything super different. It's pretty much the same thing, just looking for different entry points. All right, so we're done with that question right there for the SR rejection scalps. Let me see if there's any other questions here. Barty's asking, is there volume in US 30 more than back in 2020? Because I've only been trading US 30 for 4 months. And how long back you actually started trading US 30? I've been trading US 30 every day for the past 3 to 5 years. So, I mean, it's been volatile ever since. It's always volatile. Like US 30 will never die down because it's the top 30 US stocks. If a stock is underperforming, they're going to swap them out, Marty. So like if the stock market is moving, US 30 is for sure moving because it's a top 30 stock. So if the stock is it's the top like 30 stocks that are actively being traded. So it's always going to be active. It's never going to be dead. It's not like a Forex pair where like that thing will go flat because nobody's trading that asset, right? For US 30, there's always something going on, right? There's always earnings release. There's always inflation news. There's always stuff going on that's going to affect US 30. So over the 3 to 5 years that I've been trading US 30 every day, like I've traded US 30 every day without missing a day pretty much. And I've seen it. It's always been somewhat volatile. There's always going to be periods where it's volatile, especially during our live session time between 6:30 and 8. Like if you want to go back and look, Barty, like you can literally go back to the YouTube channel. So go to the YouTube channel, go to videos, or go to live actually, and go as far back as you want, right? You can go back to 2020 if you want, or you can go back to 2019 or 20, I don't know. I got so many videos here. I've been trading live every day for like so long now that you can go back pretty far. Like I got like, if you look at my videos here, I have over like almost 2,000 live sessions because I trade every single day. You know, you divide. So if you do, let's see, so there's about 5 days in a week, times 52 weeks a year, right? And I've been trading for like 5 years. So I have like over 1,300 live sessions. So if you want to go back and watch a live session from like 2020, you can go back and see how the market was moving back then. The thing with 2020 is that was COVID. So it's going to be volatile. Like you're going to see extreme volatility during 2020. You know, there's videos here from when we used to be called K2 trades. Like these are so long ago. And you can pull them up if you want, Barty. It's just, there's so many videos here. Every video is over an hour. So I've been trading live for an hour and a half with you guys for years now. It's crazy. You can even see how the videos, like thumbnails here evolve. Went from like a super basic thumbnail to like the more colorful ones here. So if you want to go back and rewatch, you can rewatch them, Barty, but 2020 was COVID. So you're going to see volatility, like more volatility during that time than you do now. But it'll probably pick up again as we get closer to, you know, this recession that everyone's talking about. All right, so let me scroll up real quick. And let me see if there's anything else here that I'm missing. All right, let me scroll down a little bit. All right, so here is the next question. Next question is from Martha. Martha is asking, in terms of determining technical bias, today we had a mix of bullish in the higher time frames and bearish in lower time frames, and you took a buy very early on. With this being said, should we use the higher time frames as a lead to determine technical bias? I always ask questions around this as it still creates confusion for me when we have a mix like today. So it's not ever based on just technicals, Martha. So it's based off technicals, fundamentals, and retail sentiment. This morning we had a bullish retail sentiment and we had a bullish fundamentals, right? Here, let me put the criteria. So criteria, and I think this is where people kind of screw it up. So not really screw it up, but they don't really understand because it's not just technical bias, right? Yeah, the technical bias was mixed, but we had other confluences that confirmed it. So confirming overall bias, right? Emphasize overall. right? And I feel like that's something that a lot of people, they just overlook it. I mean, overall, as in like the bias altogether, not just technicals. I feel like a lot of people just get focused in on like technicals, and that's technicals aren't the most important thing. The retail sentiment's actually way more important than the technicals because that's where everybody's trading. And the longer term bias would be that price would correct. So, and I'll put these in order. Retail sentiment is always going to be number one because it doesn't change as often. It's going to stick to that sentiment or that bias like pretty much the whole session. So retail sentiment, second, fundamental bias, 3, long-term technicals, and 4th, short-term technicals. So you do have a point, Martha, but you still kind of like cut it short, right? Because you're looking at just the technicals with your question there. Technicals are like the weakest confirmation of overall bias because this stuff can change within seconds, right? It can be like, if I turn on the trend meter here, like look on the bottom right here and look how often the trend changes, right? So you wouldn't base it off the shorter time frames or the shorter technicals because it just doesn't make sense. You can like literally just look at this and the short-term technicals change so often where it's like, okay, it doesn't really matter because it's going to follow the longer-term technicals. So, you should use the lead. Well, I mean, you shouldn't even use long-term as leading. You should use the retail sentiment as leading. Use your retail sentiment as leading, then fundamentals, then long-term. But yeah, long-term is still going to be higher than short-term. So for the most part, it's not necessarily based off of technicals. Like I never trade just off technicals. I usually use retail sentiment first. But if that's not there, then I go down to the fundamentals. And if that's not there, then I go down to the technicals. But in that case, I usually don't even have a bias. It's usually going to be neutral for me. So short answer to your question is yes, you would use the long-term technicals as a lead, but it's not always the case because you can have long-term technicals that are like bearish and you'll have retail sentiment that's bullish. If that's the case, then you for sure have a neutral bias. But if you have one that's like kind of outweighing the other, it kind of gives you a better idea. Because like, for example, if retail sentiment is like for today, retail sentiment was bullish, right? Fundamentals were bullish, long-term was bullish, but short-term was bearish. So if you look over here, I mean, price ends up correcting at some point, right? So like, for example, here market opened at 6:30 and price was just dumping for a bit, right? Until we got off here at 8. So see how price kind of came down a bit right here during our live session time? Between 8 and 10, price ended up swinging back up, right? So the correction ended up happening. It just took a while for it to happen down here. It wasn't a huge correction, but it still corrected. But at this point, the longer term technical started to shift. So that's why things started to change. Because if you look over here, see, the long term started to shift too. It was bullish until like we got off the live at 8 o'clock right here. So it was bullish until then, and then it started shifting right here as we got closer to like 10 o'clock or 8 o'clock actually. Between 8 and 10, it started shifting to the downside. So that's how you would typically use it, Martha. But yeah, that list is typically what you should look at. Always look at retail sentiment first, then fundamentals, then technicals. Technicals change faster. The bias only depends on like how fast they can change. Retail sentiment usually doesn't change that quickly. It'll take like maybe an entire day for it to start shifting. Fundamentals over here, typically if it's very heavy on one side, it'll stay on that side. But the technicals here can just shift very easily. You can even see over here on the higher time frames, like say even like the 10-minute over here, right? Like it doesn't change as often, but it does change a bit too. Like it only takes like maybe a couple hours for it to start shifting. Versus the 4-hour, which will just stay one color for like days. Even though price is pushing up, like for example, here price is pushing up, but it was still bearish, and price did end up correcting back down. Yeah, no problem, Martha. All right, let me check the list for any other questions here. Yeah, no, definitely. Martha said, based on my limited newbie understanding, since we are going for such small moves on lower time frame, should lead clarity around this would be great. Yeah, no, definitely, Martha. And that's a valid question that you have. A lot of people don't realize that, like, there's other factors that kind of indicate, the direction of price, but typically, yeah, the shorter time frames, you want that to line up with the higher time frames, or you want it to line up with retail sentiment. Because usually what you'll see happen here a lot is you'll see price, like if you go on the 1 minute, of course, you'll see where like price is bearish, right? It's coming down slightly, but eventually it'll correct back up, just like it did right here. But at that point, you're pretty much done trading for the day. And that's just a confluence to help you understand bias. Let's see. All right, Hussein had another question here. He said, is this a valid trade? June 6th. So I don't know when this trade came up right here, Hussein. Let me check the count. Let me check the I have that up. My car sticker up right there. Let me check. So what's the time set? Your time is obviously different. You're ahead of time here. Let me see if I can find it on my chart. So it looked like 12, something 40, it's around 40. I think it might have been this one right here. No, it's not that one. It's followed by like a big red candle. Is it this one? I think it might be this one right here. No, it's not this one. So our time zones are like a lot different, Hussein. So I'm not sure where that entry came up from, but let me see if I can find it. I'm going to zoom back a little bit. I'm assuming it came up recently because that's what it seems like. I just do not see it here. Let me see if I can pull up your chart. 2240. I think it might be this one right here. It looks like it might be this one right here. So for this one right here, I wouldn't have taken this because price was going sideways. So, we've had this, we've talked about this before, Hussein. I mean, it also came up like super late. Like I wouldn't trade anywhere near this time. It's already like towards the end of the session. This entry came up over here at 11:41. So there's a lot of reasons why I wouldn't take this trade. I mean, you can just look at it right here. It's in a strong downward trend, right? Price has been in a downward trend since up here. I know you're not looking at this with the bias criteria, but if you were, you wouldn't have taken this trade because price is so strong for itself. Price was in a strong downtrend right here. You can see on all the time frames, everything's pointing towards a sell. So this over here, it's not one that I would personally be looking at. I mean, if you're taking every single trade, it's a valid setup, it looks like, but I mean, there's other criteria that you would put into it. For one, main thing is that it's so late in the session. Like if you trade this late in the session, this entry came up at 11:44. Usually this is a time where I'm done trading. Like once you get to, well, I don't even trade it this late into the session. I would have been done trading like, let's see, 1, 2, 3, 4, like 4 hours before that. I would have stopped trading right here at 8. That's usually my cutoff time. But if I was to trade after this, my actual like cutoff time would be like 11 or 11:30. 11:30 would be like super late because this is where volatility starts to die down a bit and then the mid-market reversal happens. So I don't think you've been around to really understand the mid-market reversal, but usually markets tends to reverse when you get mid-market because you'll have like the initial push. Like you can see over here that price is like pushing in one direction in the morning. And then the mid-market reversal is like when the market goes opposite later in the day. So this time right here is just not a good time to trade. So I don't know if I've told you like which times are good, but looking at this as an entry just by itself, let me just see if there's anything wrong with it. So a couple of things here. One thing is the trend. Everything here is bearish. So that's one thing. I know you wouldn't use that because it's not a criteria that you look at. Another thing that I've mentioned with us before, it's not a requirement, but it's something that I've told you guys and we've looked at during the live session. So like basically see how there's your lower lows right here. if price is going sideways like this, I typically don't take the trade, right? So I always mention, like, if I'm looking for a high low momentum scalp, the trade needs to happen right away. So I look for basically a lower low, and I want that entry to come up right after, right? So I'm sure you remember this, Hussein. I discussed this, like, whenever I look for an entry for a high low momentum scalp. I don't want this to happen when price is going sideways like this, because the high low momentum scalp is a directional strategy. It's a strategy that goes straight up or straight down, depending on which direction you're trading in. So there's like a lot of things here that I would have looked at and would have told me, okay, this is probably not a good entry. For one, trend is downwards. For two, this is like a price was consolidating. If you were to mark up the range right here, I mean, it could be there or it could be here. You can see that price is pretty much in a range, right? It's just going sideways. So if you're asking me specifically if I would have taken it, I wouldn't have, because when I look for an entry, I would want something like, let me see if I can find one that's like that I would actually take. Like this right here. So even though price is bullish right here, I would still take this one right here, because see how this is a higher high right here? So there's a higher high, but I could see this as a top. So there's a couple of confluences that I would look at. This is the type of entry that I'd be looking for. There's a higher high right here, and you can see as soon as we get that higher high, price breaks and closes directly past it. Even though price is bullish right here, I would still take this type of entry, because this is a straight push. See how price gets to this point and it goes directly down? This is something that I would like, because it's like a straight directional push to the downside. This strategy, you're basically looking for, you're looking to identify the tops and the bottoms, and then you're looking for momentum to continue that direction. So for example, right here, higher high, it looks like it's at resistance right at a top. Once you take that trade, but it came down straight to your TP. This is the type of entry that you're looking for, something that's clean. The one that you identified over here, for one, it was late in the session. That's why it started going sideways. Let me go back to it. Yeah, so it was pretty much going sideways, and it wasn't a direct push at all. I think it was right here. Yeah, there we go. So see how this was lower low, but price was kind of bouncing back and forth. There was no direct push. If we had something like this, so say, for example, we had a lower low right here, and then say we had a momentum right here and it pushed past it at that point. For that one, I would take a trade. But for this one, it didn't come up like that, so I wouldn't have taken a specific trade here. So, yeah, let's see. Hussein said, no, I won't trade at this time. I'll be trading between 6.3 and 8, but only inquiring if technically it's a valid entry. Yeah, so all the criteria looks like it's met there. We have a lower low right there. I'm gonna put the criteria back up. Let me just look at it again, because I forgot what I put there. Yeah, so everything here looks like it meets criteria. Let me see. There's no higher lows in between. No momentum in between. Yeah, I mean, it looks like it would have been an entry, but just not one that I would take. So it does meet criteria though, if that's what you're looking for, Hussein. But again, like, just keep that time in mind. If you ever want to trade after the live session, Hussein, I would cut it off by 11 o'clock. Because you can see over here, like, let me just show you real quick. So you can see over here, if I turn this stuff off, like, one way for you to like look at how the market moves is just cut up the market into different pieces, right? So we basically trade from 6.3 to 8. And I only know this because I did my own research doing this. I went from 6.3 to 8, and then I marked it up from 8 to 10. 10 to 11. And then look how market moves from 11 to 12, or 11 to close. Right. So if you were to just focus on this area right here, this is our live session time, 6:30 to 8. You can see right here that there's a decent direction, right? Goes down. And then here's from 8 to 10. Look how price reverses right here. Smooth direction up. And then from here, 10 to 11, basically closure right here. And then between this time, 11 to 12, look how it just goes sideways, right? So this is usually dead time for me. I for sure wouldn't trade around this time here. And you can see how the market kind of changes, right? Here's open right here, 6:30 to 8, nice drop, correction right here, continuation back down, and then sideways between 11 and 12. If you go back and just look at data, like you just mark up every single day, and then you line it up, you'll see that like this is how the market moves. So that's why I typically don't like to trade over these times, because for one, between 8 and 10, typically like the reversal happens. And then between 10 and 11, it's either going to continue or it's going to correct back down or correct back to the original direction. Yeah, exactly. Hussein said, yeah, he won't be trading after the live session, and the back test results were much better between 8:30 and 8. Yeah, at 6:30 and 8. Yeah, and I agree. You know, it's just really figuring out how the market moves. For me, the reason why I stopped trading after 8 is because I realized that a lot of my losses happened after 8 o'clock. I would have a bunch of wins here, 6:30 to 8. Then I would have some losses here, and then I'm basically back at break even. So in order for me to prevent these losses here, I just stopped trading after 8, and I just get wins here, and then I'm done for the day. Yeah, but no, you're right, Hussein. That was a valid entry if you were just to follow criteria. But I would make sure that you look at, maybe it's a criteria that I might have to add to the list, like making sure that it's a straight move. But I don't want to add that to it because there's a lot of times where it actually plays out, even though it's not a straight push from, you know, the lower low or the higher high. Sometimes it just happens late. But this type of market that we're in, it's just very unpredictable. You don't really know what's going to come up. All right, let me see if there's anything else here that I'm missing. Yeah, no problem, Lucy. I'm glad I can help you with that. You know, the more detail, the better, so that you guys understand and there's no confusion. Let's see, ARC, so there's a lot of Dow 30. Which trading view do we use? We use YM. That's the main one that we use. ARC. You can use YM or you can use currency.com. Currency.com is like the second best. That's what we normally use before. But YM, this is going to be data directly from the exchange. So when you type in US 30 ARC, you'll see right here that it has all the different brokers. You got to keep in mind that all these brokers kind of have different data because they can set their own data. So they pretty much can manipulate it to however they want it. What we use is YM. You're probably using YM yourself, ARC, because you're trading on NinjaTrader. So you're going to be using YM as well. So you probably have that already. YM is better because you get it directly from the exchange. You can see right here, it says CBOT, E-mini, Chicago Board of Trade. You get this directly from the exchange versus US 30, which is all these other assets here, or all different broker companies. So, all right, I think that's it for the questions. If there's any other questions, guys, feel free to put them in the chat. We've been on this session for about an hour and a half. So if there's anything else that you guys want me to look at, feel free to drop into the chat. Otherwise, we'll wrap this up for the day. Let's see, CJ said someone suggested that he looks into Funder Pro and was wondering if you were familiar with them. I actually have never heard of Funder Pro before. CJ, let me check. So I'm looking at the website right now. The website looks kind of sketchy, to be honest. I mean, sometimes a lot of these companies will just sponsor someone so that, you know, obviously they have someone backing them. But I don't know, the website here just looks kind of sketchy. Whenever I see pictures like this, like stock photos, like you can probably find this photo online and use it. This probably isn't a real person. Like it's just see, if I see stock photos like this, it kind of throws me off. I could be wrong, but this website just looks kind of bootleg to me. Like, come on, bro, you got this video, which is cool. I mean, it's just you could pay someone to create a website like this. You know, there's so many different funding companies out there that like, it's just, so I could be wrong because FTMO looked kind of bootleg in the beginning too. I was kind of scared to do FTMO. I was like probably one of the first people to do it that like did it publicly. Luckily they were good, but yes, you get these bootleg stock photos. It's like, man, these guys just paid someone on Fiverr to create this website. They probably don't even sponsor this, guys. I mean, I can't say, but you can kind of tell the website looks kind of janky. But personally, I've never heard of Funder Pro, so I can't say exactly. I mean, they could be legit for all I know. Man, see another stock photo right here. I don't like websites that have stock photos like this. Like, come on, this guy's not even trading, he's just looking at his phone. Like, this is not a real person that's answering your calls. It's just, it's like a website that just got put together super quickly. To what kind of jobs they got. Yeah. Software engineer. I mean, it seems like they're kind of legit. They're open, they're located in Cyprus, it looks like. Email marketer. Sponsorship. Yeah, I mean, they could be legit. Like, you could be our person to try it out, CJ. And if they're legit, you can let me know so I can run them. I've been looking for other funding companies to use, but it's like hard to find one that's like good for scalping. A lot of them aren't good with scalping because they have slippage issues or execution issues. Like MFF is like, they're kind of on the fence now for me, but they're okay for now because they still pay out. But yeah, personally, I've never heard of Funder Pro. I have nothing good or bad to say about Funder Pro, so I can't really say for sure. Yeah, no idea. So sorry, CJ. I wish I could have gave you more information on them, but just, look for red flags like that when you're looking at the website. I think stock photos are probably like one of the biggest red flags for a lot of these, because you got to be careful with these funding companies. Like literally everyone and their mama has a funding company now. I feel like I have friends that don't even trade and they have a funding company. It's crazy. And like anyone could put it together, a funding company. Yeah, CJ said, no, I thought I'd ask you because you tend to see through a lot of the BS. Yeah, no, exactly. Yeah. Apex, the one that Arc is using, I heard that one, like from what I heard, a lot of people use that one, and I think they're okay from what I've heard, but I had never used them before, so I can't say. Apex would be one that I would put on my list if they had MT4, but they don't, so I can't use them because then I can't add it to my copier. So it's just kind of pointless for me. So. Yeah, and I heard Apex is not that bad either. Pricing is all right. So I think you're using an okay one. All right. It's just I don't have any experience with Apex, so I can't really say for sure either. I only recommend stuff that I actually use. And you guys know that. I don't try to sell you guys on anything. I don't even have affiliate links for like anything anymore because I don't really care to promote these other companies and stuff. So, all right, guys, I think that's it for now. If you guys have any other questions, feel free to put them in the chat. We've been on this for a little over than, hour and a half, which is okay. But if there's any other questions, feel free to pop in. Gosh, yeah, Ark said the only bad thing is that they have a trailing threshold. That's what I heard too. Like, you don't really have a max stop loss. You just have a new daily stop loss every day, which kind of sucks because then you can't lose more, even if you make profit. But I mean, if they pay out, that's a good thing. So if they pay out Kevin over here, then great. Then maybe it's something that I could look into. I could probably take like swing trades on, or not swing trades, but intraday trades for US 30 on that account. But all right, guys, I think that's it for today. If you guys have any questions, feel free to reach out. You guys can email me, Sean@KodiKaiTrades.com, or sorry, Sean@KodiKaiTrades.com, or you guys can message me on Telegram as well. I don't think there's any other questions here. Yeah, I think that's it. All right, guys, so that's it for today. I'll see you guys back here tomorrow for the next live session. If you guys have